Hello and welcome everyone into today's class on the day one of the Ultimate Technical Analysis course, where we're going to talk about support and resistance levels, how I draw it, how I trade it, what are the best time frames to draw those levels, and then what are time frames to trade those levels using the higher time frame levels. We're going to see how to trade those levels on a smaller time frame. We're going to talk about from entries to exits, and then I'll also give you a one big tip how I manage my trades too after getting into it or after taking an exit. So stick to it in the end, and then you're going to find out. So, guys, just so you know, as you can see the schedule from day one to day 14, I'm going to do stuff every single day, but I'm going to be missing 4 days from, I think, October 8 to October 11 or 12. 3 or 4 days. I'm going for a vacation, so I'm not going to be available. So, your job in that time frame would be to review whatever we learned in the first week, and then when I come back, I'll ask you guys the questions, and we'll have a Q&A session before starting out the second part of this technical analysis course. Guys, before we start, if you guys have any questions related to this course, please let me know in the chat so we can, I can clear your doubts, before starting out our day one session. All right. So guys, the first thing first, in talking in terms of support and resistance, what you want to say is as support is, just a where the price comes, takes support, and then it bounces to resistance where price rejects. So basically, that's the basic term for you draw support if you as a you if you want price to bounce. If you want to buy something, you will buy at support, and then you look for daily levels, swing highs and swing lows. If you want to sell something, that's you. If you want to go short, if you want to take profits, then you can use resistance or support, vice versa too. So now the key level, the key time frame actually that I look at, before, marking my levels is like first thing first, I clear out my chart every single day, and then I start looking at I only look at the fresh levels, the fresh levels, which means the past couple months or two. I don't go look back, a year or 2 year back support and resistance levels because they are not valid levels to trade on intraday time frame. Because you on intraday time frame you only want to look at the fresh levels, which is only I would say probably month to 6 months back. Nothing more than that, and then you can see them playing better compared to those yearly and monthly levels. So guys, so the first thing that you need to understand is by marking those levels is like when you marking those levels on the daily chart, you do not want to mark tons and tons of different levels on one chart. So because when you go in a smaller time frame, then you would have a trouble looking at what level to take the trade on, or what level to take profits on and stuff. So I would say minimum um, maximum 5 to 7 levels only are good enough to trade on intraday basis. Just looking at this spy chart right now. So how I would mark my levels on daily time frame is, let's say go back in here to see price did made a new highs. So and so this is my first level. Because price made a swing highs. So where the price rejected or where the price reversed from the top or from the bottom would be my key levels. Going into the next day or going into the next week. So let's say this is where the market topped, and then this is would be my first key level. And then this is where also my market reversed to the downside. This would be another key level, and then one would be here, and then this is where market bottomed, bounced, would be another level, and then this is where market bounced, and this would be my another level too, right? You see, guys, these level, I just really want to show you guys the example first how it works out. You see, in this first level, it worked out pretty great when price came to it the first time, because this was, not a, much lower level, was a, fresh local level. First time came, second time, we got a a decent reaction of this level. But as price starts to come back to this level again, now it's become weaker and weaker, and then it's in the bit it's a bit out of the time. It's not local anymore, and then now price is starting to break out of it, and then eventually broke out, made some new highs. And then if you look back, in some of the current levels that right now in the SPY is, which is this one, where price made a new highs, and it started, it moves right from here. And then what happened when price came back to this level is we got another bounce off this level right here. And then third time price came to this level, the price was not strong enough, and then it finally broke below it and retested it, and then now struggling to go above it. So guys, think of support and resistance level, as a cardboard thing. You can hit it once, and then what's going to happen. Hit it once, it's not going to break it. And you hit it twice, it's going to break it. The third time you hit it, it's going to break it. So the more and more times support and resistance are getting tested, it's getting weaker and weaker every single time it's getting tested. So, I wouldn't, trade a support and resistance, which is getting tested many times, and then it's eventually going to break out, and then, it's going to go higher, and then it's going to go find another resistance or support next. Right. So now let's go into smaller time frame to see how we would mark those levels in a smaller time frame. Because we trade intraday, and then smaller time frames are much easier to trade and much easier to mark too. Price made a highs right here, and then price just chopping around. But as you can see, so some sort of a zone is formed in this area, and then price bounced off this level, and then this is our one support here. Price bounced off this level. This would be my another level, right? And so right now price is bouncing off this prior support. This would be my key level, and then as you can see, this can be my another level, because this is where price bouncing by end of the day. And then I was watching this 424.50 level today. So I marked all the swing highs and swing low basically on a smaller time frame and on a daily time frame. Now I'm going to go in a smaller time frame, on 50 minutes, to see how I'm going to trade it. Again, guys, what I want you guys to just mark your levels on the daily chart and on the hourly chart, all the swing highs and swing lows that you can see, because these levels, they do not matter. Like you mark this level, price looks like bounced off this level right here. This is not a good level right here. It's going to mark some of the bad levels out there. This is not a good level. Most people would mark it. This is definitely not a good level. Or someone would mark this size. This is definitely also not a good level. And somewhere just in the between, which just does not make sense, where price never bounced, never came back. So let's say if you're using those levels to take profits, but price is not going to respect those levels, because price is going to go from one swing high to another swing high, or one swing high to another swing low. So let's just say, take an example. So this is a support, and this is a resistance, and this is another resistance in between, and then prices came here to the support, and then it bounced, and then that does not matter how many small resistance or price took a breaks in this zone. It's not going to stop anywhere in between. It's only going to stop where it rejected in the past. So this is where it rejected in the past. This is where the move from the downside started, and then it's not going to stop anyway. It's going to go straight there. So this is where will be another high chance that price is going to reject. So shorts will take a short position here, or there'll be profit taking level, or let's say if price breaks out of this level again, where it's going to go? It's going to go to its next swing high position. So same with the downside. If we're playing downside, right? So let's say this is a downside we're playing, and then price is breaking down of this support, and where it's gonna go. It's gonna go to the prior swing low that it made. It's not gonna stop anywhere in between in this range. So I'm gonna show you a quick example on this one too. When everyone was saying price is gonna um, right around here, right around here. When the the key reason that I was pretty sure that market was gonna dump and kind of gonna make some new lows and when most of them were buying on this sell of downside. The reason was pretty simple, guys, because look, price bounced here, right here. Price bounced off this level and it went straight up. Price, did not take any stop in between. And look what happened. Price made another support here and then it bounced. And then it broke the support again, and where's it gonna go? And the next with swing low is right here. There is no support in this level. There's nothing major swing highs or major swing lows that formed in this range. So price broke below this prior support. Where it's gonna go? It's gonna go to prior swing lows. Did go to prior swing lows, and look where it bounced. It bounced right where this was prior swing lows. It went to this prior swing lows. It broke this prior swing lows where it went. This prior swing lows right here. It broke that too. Where it's gonna go? It's gonna go to this next swing lows. Because in if you look at ES, there was also a prior swing low where the price exactly bounced off the support. So now you get the idea. So there is no reason, for you to mark, tens of different of levels, in between, when you can just simply mark only a couple of levels and then trade based off those levels, and then have a strong conviction that price is actually going to go to those levels. It does not matter how big of a gap is between those two levels. Um, right so now we marked our some of the key levels. So let's say this is a key level right here. This is where the price reversed, and then this is also where the price reversed from today. Then this is the gap. You never want to miss the gap, and this is the highs. Right? So these are some of the key levels that I'm watching, let's say going forward. And then how I'm gonna play it is um, definitely, when you see prices in this no man's land is chopping, there's no reason to trade these levels unless you trade supply and demand. If you're trading support and resistance, then the most of the time the way I play support and resistance is I just play a breakout of these levels instead of buying at support. Or if there is a good demand zone, then I would incorporate supply, incorporate support there, and then buy it from there. But as you can see, price is in this chop right now, and these levels I'm not gonna buy if price breaks out of this level, because this is not a good level to buy if on the breakout, because this is where the move started. So that means the bears are already in control under this level, unless this level is not breaking out. So this is a key resistance level. I'm going to mark it as a green one. Only long entries above, which means as long as price is below this level, the shorts are valid, right? And then this is the red one, which is a short entry below, which means as long as price is above this level, longs are valid. And then as soon as price breaks this lows, which means the shorts are gonna be much heavier, below this level. And then how I'm going to trade it is, let's say, tomorrow, looks like it's flagging too on the hourly time frame, and then let's say it starts breaking out. I'm not going to take a trade on the breakout, because I do not trade trend lines. I do not recommend trading trend lines. What I would suggest is you wait for that trend line break, and then you wait for the horizontal level to break to get into a trade. And then now this is confirmed. I'm gonna go into a 50-minute time frame now, and then I'm gonna wait for a 50-minute candle to close above my level, and then now it's confirmed that bulls are under control, the resistance is broken, and at the next moment I'm gonna wait for a retest in the next candle or the next couple candles, and then I'll add it on that retest with a target the prior swing high. So what's the prior swing high? So that is the prior swing high. There are a couple levels here. This is the prior swing high, and this is the price swing guys. So if price bounce off this level, I'm going to add on the retest. My first target would be 434.10, and then my second target, if price starts breaking out of this level, then my second target would be 436, and then we break out this level again, and this will be my next target, right? And then if you look guys closely, there is there's really no resistance here above this 436. So it's not like I'm gonna make one level here, and then one level here, because there's no point. The next swing high is right here, right above here. So if we breaks out of this 436, that means it's going to go straight to 444, and then this is where I have to look to go for a short again, because that's a nice supply zone. This is where the big move happened to the downside, right? So you guys get the point. The low number of the resistance and supports you have on your chart, the high conviction you're gonna get that the price is gonna go to one level to another level much faster. Same with the downside. So how I'm going to trade the downside is, let's say tomorrow price is just sideways. Now we have our lower highs, right? If price made another lower lows, which means breaking of this prior lows, which is 240 244.42, price is breaking down below this level. I'm going to go into smaller time frame. I'm going to wait for a 15-minute candle to close below my level, and then I'm going to add shorts on that retest right here, targeting this prior lows. And then this would be my first target. If it breaks this one, then what's my next obvious target? It's this one right here. So I gap fill, still in play. 420.90 could be my next target, followed by a 416.16. So let's say price breaks 421, there is really no reason price to bounce off anywhere in between. So this is where I expect price to bounce now from 416 level. So so you now how I mark my level, prior swing highs and prior lows. Any questions on taking entries and how I mark my levels on smaller and higher time frames? Let me know in the chat. I will try to find a couple good examples, in the what having the when we break this range, to see how you could have traded it, right? And then again, it's not like I don't trade. I trade all the time, every single day. The day I'm not trading, supply and demand. Let's say I missed my move off the demand, then I wait for a resistance to break, or I missed my short from the supply zone. Then I wait for a support to break, and I add on the retest. I do it all the time. So as you can see on my chart, the recent trade that I took was pretty simple. Price was making this higher lows, and then was going higher, and then price did made a lows here, and then formed a really nice support right here. Now we saw a bounce, and then look what happened. I missed my shot on this one on a gap down. Price did gap down, and then where it's gonna go? Like this gapping down, there's no support. What's the prior swing low? The prior swing low was 445.41. Price did go there, and then it took a stop for a couple minutes, for half an hour or so, and then it eventually broke down below that support level. And then where did I at? Then I waited for a retest. I waited for a retest of the same level, 445.41. I added right here on that retest my puts, and then it went in just half an hour or so. It went more than 100%. So a perfect break and retest that played out to the dot. There's another one that we played last week, which was this range area. This is a key support that formed on intraday level. Key support formed, price is bouncing. uh, Once we got this range breakdown, added on the retest, and then we got a whole flush to the downside. Where did it go, guys? Where did it go? It broke this prior level, and it went straight back to this prior swing lows. That was the prior swing lows of first target, hit it, and it broke down again, retested it, where it did not stop anywhere in between. It went straight to this prior swing lows right here. So fake outs, really good question right here. I was going to talk about it. How you can avoid fake outs, how you can stay one step ahead to to make sure that your entries are good, that you're taking sniper entries, and how it's not a fake out. So let's get right. I'm gonna show you some of the key examples. Is guys, for first, you need to turn on your magnet. So I want you to have 5, 8 magnets on your screen all the time. So 5 and 8, what I use to take my entries and to write my daily trends on a 15-minute time frame. So if you're not familiar with the 5 minute magnets, these are exponential moving averages, 5 and 8. So the way I trade them is, let me show you guys a quick example. Uh, Show you something like this. So now let's say, this is a support, this is the resistance that I want to trade. and then price is trying to break out of this level, and then price broke out big, formed a really nice candle right here. It broke out, and at the same time, I want to look at these magnets at the same time. So let's say this is my 5 magnet, and then this is my 8 magnet is also following the price up. And then I'm going to add it on that retest. And so this is my first support, which was prior resistance, now became support, where I'm going to take my entry, and then I'm that as this is my first support. I'm also watching 5 and 8 magnet as my additional support to the price, because the reason that I named them magnets are because the magnets, the EMAs, they attract price towards them, and then I want this a dual support of magnets as well as this support too. So which is gonna give me a higher confidence play that if the magnets are there and price is trending, this is where I'm gonna take my entry. So I'm going to tell you, I'm going to give you another scenario where I'm not going to take entry uh, using those magnets. Now, let's say price broke out higher. Price, sometimes we see instant breakout on, a big candle, but at the same time, we see the magnets are not catching up. Magnets are somewhere below this resistance level. At this level, I'm not going to enter a trade because look at my risk to reward. My entry is completely wrong at these levels. Price is up a lot from my level. So what I'm going to do is instead, so guys, if that's the chance, that means there are high chances of a fake out because price is still under the support, which is way under and price is above, and then we can see a slow, down unless the price catches up to the magnet and then hit all the stops, closes under and then go back up, by taking the magnet support. So I'm always going to watch these magnets, when I'm taking that retest. So if they're far away from the price, then higher chances that price is going to pull towards it, and they're going to stop out all the late buyers, basically that had the FOMO to buy in. And then how would I stop out? Where would I use my stop loss in this scenario? Because you cannot use this prior swing low as stop loss, because that'd be a big stop loss. So for the stop loss, what I would use is, let's say this is a 50-minute candle. I am watching it closed above my level, and then it came back, on the retest. I took my entry on the retest. I have a magnet support right here. um, and then it started going sideways or even made a new highs. But soon after, the next 15-minute candle, or let's say an hour later, the candle closed below my level. That was the original entry. That's my original entry level. Let's mark it as the green one, long entry. It price closed below my level. That means now it's a trap. Now it's a trap right here. I don't want to stay in long in this name anymore. So I will treat it as a fake out. I'll take my stop, and I'll just move on, and I'll look for another trade, right? So instead of for waiting for a price to go all the way down to prior swing lows to confirm that trade is not valid, I will just take a quick stop. As soon as candle closed above my level, I'm out, right? Because sometimes, guys, the reason I use 15-minute time frame instead of 5 minutes or 1 minute or even 30 minutes is that 30 minutes, in my opinion, is a pretty long time. As a day trader, you don't, yeah, nobody wants to wait for 30 minutes candle to close. Or if you talk about 5 and 10 minutes, 5 and 10 minutes are way too volatile, especially if you are trading the breakouts. Let's say if you're trading 5 minute time frame, what's going to happen most of the time is this is a resistance. Price is breaking out of it, closing above it, giving you um, false confirmation, and that's going to close below, and that's going to do back and forth, where you're not going to find a good entry. But if you're using 50-minute time frame, I think 50 minute is a good balance, between 5, 10, or hourly or 30 minutes. I think 50-minute gives a nice entry and exit on majority of the days, because this is not something like I'm just talking. I back tested this for almost more than 4 years now. So I've been trading it. This is one of the best time frame, in my opinion, to day trade. If you're a beginner, then I would say start with 30 minutes, and then slowly you know uh, come back to like 15 minutes. Once you're gonna get pro in this, then even 1 minute you can easily trade with the same strategy, as long as you are having a good levels on your charts. I'm going to show you good examples on this one. How I traded today actually this morning, uh, the shorts, right? This we caught the short today, I think for 50 or 70% this morning. Um, is, if you see on the charts on 50-minute price made a lows, price made a high, price made a lows and highs. So that was a clear support level right here, and price also found a clear resistance level right here. And then look what happened, guys. 50-minute, as you can see on my chart, 50-minute candle never closed above of this prior highs. That means I'm not gonna go long on this one. That I always wait for a 50-minute candle to close, because that's the confirmation that you are looking for. That's the confirmation that a big money is looking for. They are confirming that it's a successful breakout, so they can put their money to work on that retest. So the same thing, 50-minute candle is not closing above, I'm not taking a trade. Look at this candle today. 50-minute candle is not closing above this resistance level. I'm not taking my trade. And then look what happened right here. This is where I took my trade, where today 50 mil candle closed below my level, and then I did not take a trade here, but I took a trade right here on that retest when it started retesting my level. And then as you can see, the magnets were right above it. Magnets were right above it, 500. And I took my sniper entry in here. I alerted the premium that I'm in a 0 day efforts, and then guys, zero drawdown, and then instantly got 60 to 70% in just 15 or 20 minutes. And then we were out. Um, right? And then for the profit taking levels, guys, it really depends on on just on you. Because thing is, let's say if when once you're up 40, 50, or 60% in your trade, then then you don't want to be in a full size in a position. Then you obviously want to take some out, or take half out, or only have runners left at a break even. This is what I did. Even though I was expecting price to go to this level today, which was my target of 423.30, but price, what did it took a this prior resistance was this was prior support here. Price failed to close below it, and then instantly bounced above, confirming that it was a fake out. And then I stopped the rest of my position at break even too. So you always want to take some of the position off once the trade is working out. Because the thing is that your main position is not going to make you money in trading. The runners is going to make you more money than your actual positions. So let's say you are in with in a full size, you take half out, you let your runners ride at break even. Those are going to make you 3 to 4 times more money than your first half size that you took out. So the main goal is to, when you enter a trade, is to have protect your capital. Once you protect your capital and the for the fact that you are in profit, then you're gonna let your runners ride, and then you're gonna make more money. I'm gonna show you a couple more examples on this one. How I traded. Yeah, the thing is, that's how I started trading. That's how I started trading. Trading this 15-minute time frames using magnets and all that stuff. I basically, I went out and then tried every single setup out there, every single magnet out there. I tried one, two, three, four, five, every single magnet I tried. Then I came up with 508 and 15-minute time frame. After hundreds and hundreds of trade, back testing it. As it went into my journal. So that's how I came to know these were the one of the most successful to trade. So now let's look at some of the another examples, which are this prior highs. So looking at price made a highs, price made a highs right here, and then I'm going to mark it as my resistance. And look what happened. Price broke out above it. This is where I'm not going to get, because again, taking a trade is it just up to up to you guys. Either you can take a trade on a candle close, or you can take a trade on the retest. It's just just on you guys, because sometimes you always not gonna get a retest, right? So sometimes just price gonna kind of close above and then just gonna go. So it really depends, according to your risk. If your risk is bigger, and then you want to take more risk, and you are playing, let's say a week or 2 weeks out call the puts, then you can definitely take a trade on the candle close too. But for me, I always, I like to buy cheap, and I like to buy on the retest too. So look what happened. This is the prior resistance. We had this, one time, two time, it couldn't break out, finally broke out, came back to retest, and then bounced higher. And then where did it go, guys? It went to this prior resistance. It did not stop anywhere in between. It broke out. It went to this prior, just gapped up the prior swing highs and rejected from there. This is where we shorted the top on Friday and then made 200% on our puts, right? And then let me show you, a couple more examples because there's so many. There are so many. I can just show you examples, back to back, and just it's gonna be like 24 hours I can straight show you these examples because I traded every single day, just not on SPY. Now I can show you some examples on Apple too, related to this. Now let's go into hourly. Now I'm not going to daily time frame and let's mark some levels. So the key levels that I'll be marking on Apple would be this is the key range, and that's the key range low here. Price found bounced, and then this is where price bound. This is my another key level I would be marking, you know, and then a lot of choppy action though. And this is another key level I'll be watching, right? Because now that all of these levels, they're pretty old and price testing it first time, second time, and then the more they're gonna test it, the more unimportant, these levels gonna become. And then now these are some of the key levels right now that are local levels, right? So these are the prior lows right here. This is where I took a huge shot, but I was watching Apple. And now let's go into 50-minute time frame to see how would I traded it. This was the prior support here, prior support breakdown from this small range right here, from this small range breakdown, and then I added on that retest. I was watching QSports, but I'm just watching Apple because QSports moves nicely. Zero dates apples, it's just weeklies, and broke down retest this level. That was a confirmation for me that price can go down. And then if you look at the magnets, price was also right under the magnets breaking below, giving me a sniper entries on the short, and then went below it. And the next day, what happened? Price came back to this level again. If you look at hourly, let's say if you are trading the hourly retest, right? Hourly level breakdown, went into the hourly retest, and then gave a nice intraday short for probably 40-50%, and then went back up. So what are some of the next key levels I'm watching on Apple, or how I would have traded, how I would trade it? So that's the high that it made, and then that's a low that it made already on hourly time frame. So I'm going to go into a smaller time frame, 15 minutes, and then let's say tomorrow if Apple is breaking 174, I'm going to wait for a 15-minute candle to close above my level, and then I'm going to add it on the retest, and then my target would be this high there around 176.10, because this is where the move started, and this is where my first target. Price breaks out of this level, then there's a prior swing high. Swing high was 177 would be my another target. We break this one, gonna go straight to this level here where price rejected prior swing high 177.81. Same as the downside, right? We have this 172.55 level. We break this one, and where it's gonna go? It's gonna go straight to 170.87. It's not gonna stop anywhere in between. It's gonna go straight to 170.31 level. Has a nice support, break it, gonna go to 167.61. It's not gonna stop, in this, so there's no reason to have one zone here, one here, one here. There's no point. Why? When the price is just gonna go flush straight to the price swing highs and swing lows. So, all right, guys, any questions on support and resistance, how to take an entry, and then how to identify a fake out or how to take your exit, all that stuff? Do let me know in the chat if you still have any questions. I try to, I'll go deep as much as possible, on marking those levels, on how to trade it, how to take exits, how to identify fake outs, all that stuff. So shouldn't be any problem. But now the main part is on your end. You need to go on all these charts and then mark all your levels on every single day. So, and then you get more expert on marking those levels, on marking those levels on your own. Because the thing is, you're not going to get perfect right after this class. You need to put work in. You need to put But I have 200 charts in my watch list that I chart every single day. There are 160 names and there are 30 to 40 ETFs that I have in my watch list that I trade that I chart every single day. So that's how I refined my charting skills. And then once you know how to mark good levels, then you can definitely take good trades off your levels too. How do you write your EMAs? What are your sign that it's time to stop writing those EMAs? Guys, so I'm going to show you something like this. Let's say, this is a level that I'm watching to take my shot, and price broke down. This is where my magnets are. I take my entry on that retest, right? And this was the prior swing low, obviously my first target here. And then it went to my first target. I was, I take some out on that. But as long as price is below my magnet, I'm not gonna sell. And in that terms, let's say if you're up nice on your day trade, then you can use, you can use 15 minutes. Let's say 15-minute candle is closing above the magnet, above eight magnet is 15-minute candle closed. Then you're like, you know what, I'm out. I'm gonna wait for another breakdown and then I'll enter again on this one. So let's take a look on some of the examples here. Right here. So now let's look at 30 minutes. I use usually 30 minutes. 15 minutes. You can have some of the fake outs on 15 minutes if you wait for 15-minute candle to close above the magnets. So I use 30-minute time frame to for a confirmation of basically a trend change or for a fake out if I'm up nice on a trade. So if looking at Apple right here on 30-minute time frame, is price is below the magnet right here. Let's say you took a short entry right here on that retest, and then I'm gonna stay in the position as long as price is below the magnets. So 50-minute is not closing above, or 30 minutes not closing above the magnet, I'm staying in, right? And then I'm short right here, and then 50-minute is closing above 50-minute is closing above my level, that means I'm gonna get in the hell out of my position right away, or the runners most likely, because if the trade is already in good profits, as you're riding the waves, and then less than half an hour or 2 3 hours, price starting to close above the magnets, that this is where I'm gonna take my stop on the runners most likely. So if price is not closing above, that means it's gonna start rejecting, close under it. That means the trend is still intact. I'm gonna stay in the trade. 5 and 8, which is stronger for you? I'm assuming 8, 5. Let's see. It just really depends, guys. 5 and 8, they're not far away from each other. They're probably like a couple cents difference in those, but that gives you a nice a cushion as a support, and then a nice wall. If you're trading as a resistance. If you look in here on 30-minute on Apple, nice on a downtrend, price trying to close above this magnets, couldn't close it and then made a new lows. And then, same to the upside, every single, even though, most probably went short on this huge wick, but price was above this magnet and then, took a support of this prior highs, retested, and the magnets were there on 30 minutes, retested it, and then just went higher, made a new highs. Right. So just write those magnets once you're in a trade, and then you're good. Let's look at some of the 50-minute time frame magnets here on 15-minute, guys. Look, 15-minute price closed below this level, and then price enter the magnets. There's no reason to sell, and then as soon as price is closing above, I'm probably gonna take my stop, or I'm just gonna probably get out of my runners right here as price. Let's say I'm short, that kind of closed above it, I'm out right here. Now, guys, again, this is not gonna work when price is chopping to the downside. Because when I draw my levels, I use 15-minute time frame, 1 hour, and daily. So these are the only three time frame that I trade, or where I draw my levels. There's no other time frame that I use to draw my levels, and then I only draw horizontal level. I do not trade trend lines, because as I can show you right here, let's say if someone do trend like this, they already, let's say you are taking a breakout trade, then you're gonna stop out, and then let's say if you are trading this downside, look what happened, it broke down, and then another stop out right here. So guys, the trend lines is, you can basically, you can draw, any way you want it. So it's not like, I'm gonna draw my trend lines, my way, and then I don't know how you draw it, and then how you're gonna trade it. So so that's why the most people will fail on trading these trend lines. Instead, if you look at horizontal levels, so it's just not me. I'm watching this, prior swing highs. It's just probably thousands and thousands of other traders that they're also watching the same level. So if price breaks out of this level, and which means there are high chances that all the other traders are going to jump into on that successful breakout, and they're going to lead to push price high, right? So only horizontal levels, no trend lines or vertical levels for me. Uh, so guys, I'm just gonna wrap up today's session. Just gonna tell you guys how what we learned today. It was a pretty basic stuff. So today I talked about how you can draw your levels on the daily chart using prior swing highs and prior swing lows, and then how you can take the entry using those levels, and then how you can take exits to how you can mark your exit, which is also prior swing highs and prior swing lows, and then you're gonna take your entry on 15-minute candle close and on the retest with the magnet support 5 and 8. And then for a fake out confirmation or for exit confirmation for the trade, the 15-minute candle close the let's say the entry level. If the next 15-minute candle is closing below my level, that means I'm going to stop out of my trade. Right. So guys, these are some of the main key points about support and resistance. So just to guys warm it up, because the next stuff that I'll be teaching it be pretty much advanced. The next class tomorrow, which is on candlestick patterns, how I trade candlestick patterns using those support and resistance. I will show you tons and tons of examples, just like today, that how I use those candlestick patterns in everyday trading, or when I'm swing trading to snipe the tops and bottoms too. So once you guys get to know these candlestick patterns, once you know how to identify those patterns, then it'll be much easier for you guys to trade support and resistance too at the same time, right? So I'm going to take a leave today, guys. Hope you guys learned something new today from this class. If you guys still have any questions, you guys ask in the chat room, or I'm going to upload this video later on too. You can watch it, make notes, practice on your own. Again, hope you guys like the class. If you do, please, give a nice review on Twitter or on the group where you signed up for this free 14-day technical analysis course. I'll see you guys tomorrow. Have a good day, everyone.